Thomas, you may not think so, but there are already expectations oil could be at 80 in the third quarter, 100 by next year. If you take a look at what happened back in 2008, when oil prices surged, stocks sold off. At what oil price do you see that impact on the stock market?
Oil prices are influenced by three major factors: supply, demand, and geopolitics. Supply has historically been determined by countries that are part of the Organization of the Petroleum Exporting Countries, also known as OPEC. But now, the United States is playing a bigger role in supply, thanks to the booming production from American shale fields.
A lot of frustration here with the United States. U.S. output has doubled, guys, in the last 5 years. OPEC's trying to keep price stability. They're trying to do what they used to do, which is sort of control the market. But here's the U.S. just pumping and pumping and pumping. Also, the overarching one, Iran, obviously accused of the tanker attacks, accused of the drone attack as well. U.S. sanctions on Iranian exports.
Geopolitics. Remember how supply is determined by the big oil-producing countries? Well, if there's tension with one of those countries, like a major war or conflict, it could throw off the supply of oil, which would then alter the price of it.
At my direction, the United States military eliminated the world's top terrorist, Qasem Soleimani.
A rare public rift has opened up between Saudi Arabia and its Emirati allies over a crucial oil deal.
Let's talk about how that OPEC meeting might affect the broader markets and maybe inflation as a broader level and what we've been watching.
Oil closing down a bit on concern the current OPEC deal, output deal anyway, could implode or OPEC itself could fracture. The market is nervous about sort of the every nation for itself mentality again that hit last year when oil prices collapsed.
Breaking news. We're learning the U.S. military carried out airstrikes tonight against Iran-backed militia groups in Iraq and Syria.
Oh, shit. Here we go again.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful week so far. Let's get right into today's episode. It's been a bit longer than usual since we've last posted a video, and the primary reason for that is we really haven't seen any new developments nor any deviation from the overall plan. Nothing at all has really changed. Bitcoin is still sitting right at $34,000. The entire crypto market cap is still retesting this former support, now confirmed resistance. The DXY still looks pretty bullish. The S&P 500 is again pushing back into new all-time highs. The DJI is still pushing into new all-time highs as well. And we are still seeing the 10-year rate fall further to the downside. So overall, nothing really has changed, but we are a lot closer to a potential breakout, one that will definitely be worth trading, and we'll be doing so over on Bybit, earning APY just to keep your funds on the exchange in these open buy orders while we wait for Bitcoin to possibly come down and fill our orders. So make sure you join the free Telegram group to stay up to date on our bearish and bullish price targets, daily trade setups, and of course, news alerts. Now, while price action has appeared pretty weak over these last few weeks, the bulls have successfully defended the $30,000 to $34,000 price range, which is between the 34 and 55 weekly exponential moving averages in what so far appears to be a broadening bottom pattern. Posting higher lows since the $28.6 thousand low back on the 22nd of June, there's no doubt that we are witnessing some accumulation at these price levels. But even though we are seeing signs of accumulation, I am a bit skeptical that we're going to see Bitcoin take off towards new all-time highs anytime soon. Really for a number of reasons, but mainly because every quote pro crypto analyst here on YouTube is calling this a Wyckoff Re Accumulation range, pointing towards this schematic as a reference, calling the 28.6K low as the spring here in phase C. Now call me crazy, but with just about every Simfluencer out there so incredibly confident that this schematic is playing out perfectly, I am fully expecting a Bitcoin price action to take an alternative route, likely one mentioned by the likes of a few rather than the many. So if you call yourself a Wyckoff trader, then you should understand the concept of a comp man or a composite man, and you would be aware that the most obvious price trajectory of price action is likely not going to be the way that it plays out. Now, I do see some accumulation taking place at this consolidation range, evident by on-chain data showing the massive amounts of Bitcoin leaving exchanges over the last couple of months. We are not seeing typical price action characteristic of strong bullish accumulation. Now, what we are seeing that has been pretty characteristic of a Bitcoin accumulation, especially last year in 2020, are the return of these Bart Simpson patterns. Now, this characteristic volatility is typically caused by order spoofing by whales, or when whales post large Bitcoin buy or sell orders, then yank them just before they're filled, driving the price quickly in one way and then quickly back in the other direction. Now, these patterns kill traders, especially those using too high of leverage, and I've learned that the best way to trade these is to look for entries on higher time frames at lower support levels, hoping to get a wick down to fill your limit order. Otherwise, I'm really not trying to trade these highly volatile patterns that are really unpredictable. But until we start seeing some more solid signs of accumulation, i.e. volume, parabolic fractals, bullish patterns of breaking bullish, and higher lows, I'm still not convinced that this correction is yet over, and the longer Bitcoin stays under the 21 weekly exponential moving average, which is currently at $40,666,000, the more I start to think it may be time to reevaluate our monthly chart that predicts a $350,000 plus Bitcoin sometime between November and July of 2022. Now, however, the fact that Bitcoin has not yet made it back up here to test these former support levels and confirm them as new resistance could really be a great sign that the bull market is really just taking a breather instead of a long, extended bearish hibernation, also known as a bear market. Now, stick with me here. Now, typically what we see at the end of a bull market is some sort of a blow off top where we get this nice, strong, extended move to the upside. And then when price starts to move back down to the downside, we get some sort of topping pattern. In this case, in 2017, 2018, it was this nice, almost perfect descending triangle. But one thing to note here is the relief rally that we got fairly shortly after we saw the peak in 2017 back up to test these former support levels and confirm them as new resistance. This confirmation of new resistance is really the first bear market confirmation following the break of the 21 exponential moving average. Now, moving here to current price action, that is not what we have seen yet with Bitcoin price action. Ever since Bitcoin broke bearish back in the beginning of May, it stayed within this fairly tight consolidation range, not yet pushing up and confirming these former support levels as new resistance. In fact, we really have not even gotten a bounce off of the 21 weekly exponential moving average, confirming that level as new resistance. Now, in order for Bitcoin to come up and test these low $50,000, high $40,000 range to confirm them as new resistance, it will require the bulls to push price action back above the 21 exponential moving average, which has historically been an area of pretty strong bull market support. A strong move up to test these levels at this point, in my opinion, would be a fairly strong sign of bull market continuation versus if price action confirmed the SR flip a month ago when, say, these crucial exponential moving averages were higher in price. A move that, as I mentioned, is typically a primary bear market confirmation when these former support levels are confirmed as new resistance. Instead, the bears have kept prices within this tight consolidation range between the 34 and 55 weekly exponential moving averages, while the bulls have strongly defended the lower $30K, high $29,000 price levels. And at some point, though, Bitcoin is going to pop out of this range, and considering how long it's been here, it's likely going to be a pretty strong move. The only question is, what direction will this move be? Considering that the Fed announced that they had no plans on raising rates in the near future, or at least until 2023, a lot of analysts were expecting to see some bullish momentum return to Bitcoin and the entire crypto market. In a similar way, it's returned to traditional markets. I mean, the S&P 500 responded really well to this news, pushing back into this giant rising wedge pattern and breaking into new all-time highs. We're seeing the exact same thing out of the DJI as well. However, contradictory to this response, we are seeing the dollar actually gain some bullish momentum as it is attempting to break bullish out of this double bottom pattern, likely coming up and retesting this area of former support and confirming it as new resistance before finishing the measured move of this giant diamond top pattern, likely all the way down to 79% on this index. Now, considering the Fed intends to let the economy, quote, run hot for the foreseeable future, it would make sense to see the DXY resume its bearish trajectory and the 10-year rate start to climb as well. But again, that is really not what we're seeing. And with the Fed keeping rates low and continuing to fund the American corporate welfare system, continued bullish momentum in stonks is expected. And that is exactly what we're seeing here with the S&P 500 and with the Dow Jones Industrial as well. Now, something interesting here is what we are seeing in the gold spot price. So this is a gold spot price on the daily. It does appear to have broken bullish out of this falling wedge or descending channel pattern, getting the bullish confirmation and retest of this trend line here, likely the move before pushing a bit to the upside. Now, if we zoom out here to the monthly chart, we do start to see something pretty indicative that does make sense in terms of financial markets and the state of the economy right now. Now, gold did break across the neckline of this giant cup and handle pattern, and it did break bullish out of this falling wedge, which would be the handle structure in this giant cup and handle pattern, giving us a measured move just under 3K at $2.896 thousand, with the next move higher at $3.5 thousand, sending gold up to new all-time highs. Now, this could be interpreted a number of different ways, but what this says to me, this suggests that smart money may be moving their profits out of traditional markets or more risky investments and into more risk-averse assets, but we are looking at smart money moving their wealth into inflation hedges like gold, precious metals, and now they have Bitcoin. So if you consider the fact that Bitcoin is without question the most perfect form of money ever created, it makes sense to assume that if the spot price of gold begins to rise in response to current monetary policy, then we should also see a correlated response in the Bitcoin price as well. This move by smart money makes complete sense, especially as famous investors like Michael Burry, Robert Kiyosaki, and Ray Dalio continue to sound the alarm on the potential epic stock market crash that could be right around the corner. Now, it may be too soon to make this inference, but it's definitely something to keep in mind as we move through Q3 into the latter half of the summer, as federal assistance for unemployment for millions of unemployed Americans begins to disappear, and the looming threat of the coronavirus Delta strain continues to wreak havoc across the globe. In the last episode, we went over this chart showing heading into 2020 before the thought of a black swan event was really on anyone's mind. Interestingly, though, the similarities that we are seeing right now in the global financial and economic affairs of the world are pretty stunningly similar, with the Saudi-Russia oil price war of 2019 a likely contributor to the fragile financial system that nearly collapsed last year. We're seeing the global prices of oil again held hostage by competing oil-producing countries. The question now is, are we going to see price action play out in a similar fashion? Or is the Bitcoin price going to explode to the upside as more and more institutional investors look to Bitcoin as their primary hedge against the instability of the current financial system? All right, just to wrap things up, some important dates to keep your eyes on as we head through the month of July, really the 12th through the 17th. It's going to prove to be a pretty pivotal week for Bitcoin. The Fed has some very important bond auctions that could give us some insight into the strength of the dollar as we move deeper into Q3. The New York Fed Reserve is set to purchase TIPS, or or Treasury inflation protected securities, and the Consumer Inflation Expectations Report is set to drop on the 12th. Now, this will give us some pretty solid insight into the so-called transitory inflation that we are experiencing right now. Most importantly would be the 17th through the 19th of July. Now, Greyscale is set to unlock 16,240 Bitcoin in one go. A combination of a negative premium relative to the Bitcoin spot price and a large unlocking of funds means that July is going to be a pretty interesting month for Bitcoin. Now, previously, such an alignment has really meant just really increased volatility. However, this unlocking also provides a solid chance for selling pressure to stabilize after this Bitcoin is unlocked, paving the way for the bulls to come in and crush long-standing resistance levels, possibly flushing sellers from the market and potentially sending the Bitcoin price back up towards new all-time highs. But that's it. That's all I have for you guys today. Thank you all for dropping in and sticking with me until the end. Again, if you're interested in learning technical analysis and how to really position yourself in this market to trade successfully, head on over to our website, 3candlecollective.com, and submit your information today. I'll see you all in the next video. Peace.